Good evening to everyone in round two. I hope you're all doing great. I'm here with you for the daily analysis of Solana on March 4th. We're currently reviewing the daily time frame. As you can see, the main trend is still downward, and the price has been
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Consistently making lower highs and lower lows. The sharp drop at the beginning of February indicates strong selling pressure, and after reacting and bouncing off the 50% line of the daily order block, the price had a small upward reaction and has entered a ranging phase. Currently, the price is ranging around $85 and still hasn't shown enough strength to change the trend. There is an important resistance level at the $95 price range, and if the price reaches that level, there is a possibility of a selling reaction. Similarly, if the key support at $75 is broken again, there is a higher likelihood of further decline. We are currently analyzing the inflow and outflow of liquidity into Solana ETFs. You can see that over the past 2 days, there has been a positive inflow trend. This capital flow has been positive and inflowing over the past 3 weeks, and along with the Fear and Greed Index rising to 19, it indicates a return of investor confidence to the crypto market. And in this chart, you can also see that this number has reached its highest level in the past month. Alongside the return of investor confidence and the capital inflow we've witnessed in the crypto market, we can observe on the 4-hour time frame that Solana's price is still fluctuating within a specific range and has not yet had enough strength to break out of this range. We should also keep in mind that the military tensions between Iran and the United States are still ongoing, and in such an environment, investors tend to move away from risky assets like crypto and seek safer assets such as gold. It is possible that if we witness an end to these tensions and the war, the crypto market could experience a strong upward movement and put an end to its downward trend. But as long as these tensions persist, we can't really count on that happening. In this range, we also observed that after the start of the war and Solana's sharp price drop, it reacted to its own 4-hour FVG zone and rebounded upward from this area. Again, when we later saw a drop in Solana's price, it reacted to the 4-hour FVG zone at the 81.68 range, and the price went up again. In yesterday's trading trend, we also saw that the price was initially closing with bearish candles, and after reaching the previous bottom area at $89.54, it found support and bounced back up. And finally, yesterday's daily candle closed as a bullish pin bar candle. By analyzing Solana's liquidity map, we can get a better picture of its potential next move. As Solana moved within the mentioned range, it accumulated significant internal liquidity. And currently, the best buy-side liquidity is at the $88.14 level, as well as at the $90.74 level. The closest sell-side liquidity is located at the $83.50 area, as well as at the $82.12 level. By examining these areas on the chart, we can see that the best buy-side liquidity is positioned above the previous highs, while the largest sell-side liquidity is observed at the previous main low. At the moment, we have 2 opposing factors: support for the crypto markets and, at the same time, tensions between Iran and the United States. So, considering both factors, we will examine the possible scenarios. If, following increased tensions, we are looking to enter a bearish setup, we can consider that the price, after rising and collecting 1-hour liquidity in the range of $88.37, may face selling pressure and start a downward move. And regarding a bullish setup, as you can see, there was a 1-hour FVG in this area, to which the price returned. Now, with pin bar candles, it has reacted to the void area of this FVG and still hasn't been able to break below this area. Taking into account that this actually counts as our third major strategy, we can reasonably expect a significant short-term bullish move to occur very soon. In this area, we enter a buy trade, set the stop loss below the shadow candles, and for take profit, we can use an RR ratio of 1:1 or 1:2. Wishing you success and profitable trades.